Let me now turn to Malaysia. Although the year 2025 was extremely challenging, the domestic economy navigated it very well. Growth reached 5.2%, while inflation remained low at 1.4%. Domestic demand stayed firm, and exports showed resilience. Credit to the private non-financial sector grew by 5.4%, with SME financing expanding by 5.9%. Of significance, the ringgit steadily strengthened throughout 2025. Continuing from 2024, the ringgit once again performed well last year, appreciating against the US dollar and key trading partners. Global factors such as the dollar performance played a role, but so did our domestic strength. Year to date, this positive trajectory has continued, although the recent developments are causing some movements. And going forward, the ringgit will remain driven by market conditions and global forces. And towards this end, Negara Malaysia is committed to ensuring an orderly markets. This brings us to the outlook. Malaysia enters 2026 from a position of strength to navigate the challenges ahead. Our strength lies in, first, the diversified growth drivers with cushions to preserve external sector strength. Second, the healthy balance sheet positions among households and firms. Third, the strong financial sector that supports the economy to grow. And fourth, the sufficient macroeconomic policy space, both monetary policy and fiscal policy. And taking into account all these factors, the Malaysian economy is expected to grow at a resilient pace of between 4 and 5% in 2026. Now, let's look at the drivers of growth. Household consumption remains a key anchor of growth. Income prospects are positive with continued income growth. Labour market remains firm, with unemployment expected to remain near its decade low at around 2.9%. Targeted policy support are also in place to help Malaysians in need. On investments, the positive news is investment approvals continue to increase, reaching to 427 billion ringgit last year, while implementation rate for manufacturing projects remain high at around 85%. Clear policies and incentives, diversified supply chain, and strong infrastructure, as well as skilled workforce, are among the factors that attract investors. We see private sector capacity expansion gaining traction, led by the ICT and the E&E industries. We also see progress under the national master plans and major public investments, including renewable energy and the transportation projects. The realization of these investments will strengthen Malaysia's productive capacity for the future. Moving on to trade. While the external conditions are uncertain and challenging, real exports growth is expected to be moderate at 2.8%. Despite the headwinds, there are three points that's worth noting. One is that we have a diversified export base. No single country accounts for more than 16% of our exports. And across products, Malaysia also exports different goods and services, from commodities to advanced services. Number two, rising data center investments, lifting the ICT services exports with wider spillovers across industries. And third, supported by its deep roots and linkages, our E&E sector is well positioned to gain from the global tech investment cycle. Not many countries can showcase such a diversified external sector.